I'm Johnny Hart, and you're listening to the Market Insights Market Pulse podcast. Let's join our experts for Wednesday. It's Trader Nick in the United States and Oanda Senior Market Analyst in London, Craig Earlham. Good afternoon, guys.
Hey, Johnny. Good to be back.
Now, Nick, I wanted to ask you, first of all, we've heard today from the Bank of Japan a much trailed announcement from the BOJ about monetary policy. But in the end, they've decided that everything is going to remain unchanged, although there is quite a dovish tone to what's been said.
Yes, and I guess with the Bank of Japan, they have a tendency to behave a lot different than what we kind of expect on the Western side of things. Very clearly we have, the chair speaking, and we get a pretty clear shot. There's a lot of contention here where some Bank of Japan officials, I guess not so unlike our own Western style, there's some contention here. There's difference in opinions, but Ueda did kind of have a bit of a more dovish tone. And this is something that is an interesting thing to watch because the yen has been really strong recently compared to, of course, it's been incredibly weak for most of 2023. So it's an interesting kind of shift in direction. However, we saw the dollar yen trade up off of its lows. It was recently trading as low as around 141 against the dollar. So of course, the yen in that case being 141 yen to get $1, that swung back the other direction here since that two-day meeting. And so we now kind of see that the dollar trading a little stronger against the yen. And notably, that is largely due to yen weakness because the dollar itself is not looking exceptionally strong right now. So when pulling up the currency pair here, you have an interesting swing back the other direction. And, that's a noticeable move. That's almost 400 pips swung back the other direction. It's been a very, very hot topic in the currency side of things, the dollar yen specifically being this interesting dynamic where you have a Federal Reserve, which seems now to be shifting its entire conversation about rate cuts. While, you have the Bank of Japan, there's a little bit of mixed, but the governor, Ueda, being on the dovish side of things, does add a little bit of, throws a little bit of cold water on this idea that the yen is just this powerhouse where, again, there's some mixed sentiment here. I do think that in the currency world, it's always important to look at the full room, and we'll hear from Craig in a moment just about the Bank of England, and with that inflation number, we did get some cooling inflation there. That's also what we're seeing. Again, the inflation cool down trend is present in several places in Europe and now in UK and in the US, and it is a difference, I guess, in the mindset and approach that the Bank of Japan is taking. But overall, it does create some interesting setups as we end the year. We round into 2024 on the currency side. There is quite a bit of difference in some of the central banks from east to west. So I think that it could cause some good volatility as we go into the new year. And in terms of other currency pairs, I know, again, Craig will have a little bit more to say on this, but the pound dollar did trade lower off of this news. It lost some of its steam. But meanwhile, the euro is staying very strong against the US dollar, almost trading back up to that 1.10 level at the time of recording the podcast here. I also want to make note that in this somewhat dovish shift, this kind of pivot across many of the central banks, we do see something noticeable happening. We have the Dow Jones Industrial Average hitting another all-time high. It is back above that 37,000, which is a significant push higher. And as we speak today, we are hitting yet again another record high, trading 37,641, with some of the other indices not too far off their highs as well. You have the S&P 500, I believe, getting pretty dang close to that, but not quite there. Same thing with the NASDAQ. But again, I think that shows, even if you're a currency trader or a commodities trader, understanding that indices nearing their record highs is a tell in terms of market sentiment. People are a lot more optimistic about the outlook and the way things are going than they were certainly at the start of this year. And as we go into 2024, it seems like there is quite a bit of optimism.
And Nick, we've had the UK CPI today. On Friday, at your side, on Friday on your side of the Atlantic, we're going to get the latest core PCE numbers, which will be another important indicator to what happens to interest rates next year.
It certainly is going to be a noticeable figure or something to keep an eye on. I will say also, we usually preface PCE numbers with the idea that, we usually get CPI and PPI before that, which give us a lot of the inflation statistics already. It has been pretty clear now that inflation seems to be coming down pretty meaningfully. Core PCE, I think most traders, most investors will simply be looking for that number to confirm and to continue the trend. This is very different than where we were several months ago, where the consensus, the almost the path of least resistance was inflation was just going to be a problem and stay sticky and it wasn't going anywhere. I think we're in a different time now. Now it's the consensus is it's coming down. It should just keep coming down. And the only thing that really surprises or gets markets moving, I think, is a tick much higher in inflation, which is very, very unlikely. So, and again, that is why it would cause such a market stir. Is if you got something surprising, it would be very against consensus in terms of, again, this continued inflation cooling that we are seeing. So I think, again, core PCE on Friday, people are going to be just keeping an eye on that to make sure that things are staying in line. We do have final GDP, not usually a big market mover, but could still be something to watch out for, and claims on Thursday as well. But again, in terms of your question about inflation, how meaningful, how important is this? I would say it is only important if it is a sudden disappointment. But for the most part, I think it's just, let's check this off in our line of, basically good news in the inflation front. And I will add on there, again, we just mentioned moments ago that stock market hit an all-time highs, dollar index has fallen a lot. The standards are very high for this inflation trend to continue lower. If there's any surprises there, market volatility could get much higher, even though that is going to be on December 22nd, right backed up to Christmas, which is the week after.